Let's kick things off by exploring the concept of dividend aristocrats. These are companies that have not only paid dividends consistently, but have also increased those dividends every single year for at least 25 years. This remarkable achievement signals financial strength, stability, and a commitment to rewarding shareholders. Investors often look to dividend aristocrats as reliable sources of income, especially during uncertain economic time. In this video, we'll dive deep into what makes these companies special, why they matter, and how you can benefit from understanding their strategies. So let's begin our journey into the world of dividend aristocrats. Qualify as a dividend aristocrat, a company must have increased its dividend payouts for at least 25 consecutive years. This isn't just about paying dividends, it's about raising them year after year regardless of market conditions. Such a track record demonstrates resilience and a strong business model. Companies that achieve this milestone have weathered recessions, industry changes, and economic cycles, all while continuing to reward their shareholders. This 25-year rule is a key filter for investors seeking long-term stability and growth in their portfolios. Dividends are more than just extra cash in your account. They represent a company's confidence in its future earnings and its commitment to sharing profits with shareholders. For many investors, dividends provide a steady stream of income, which can be especially valuable during retirement or periods of market volatility. Companies that consistently raise dividends send a powerful message about their financial health and long-term outlook. This is why dividend aristocrats are often favored by income-focused investors. One of the most impressive aspects of dividend aristocrats is their ability to maintain and grow dividends through all kinds of market environments. Whether the economy is booming or facing a downturn, these companies have demonstrated a remarkable level of consistency. This reliability is a testament to their strong management, diversified business models, and prudent financial practices. For investors, this means less worry about income fluctuations and more confidence in the long-term prospects of their investments. The S&P 500 Dividend Aristocrats Index is the most well-known benchmark for tracking these elite companies. Managed by S&P Dow Jones Indices, this index includes only those S&P 500 companies that have raised dividends for at least 25 consecutive years. The index is reviewed annually, and companies that fail to meet the criteria are removed. This rigorous selection process ensures that only the most consistent and reliable dividend growers are included, making the index a valuable tool for investors seeking quality and stability. Dividend aristocrats come from a wide range of sectors, including consumer staples, healthcare, industrials, and financials. This diversity helps reduce risk for investors, as performance isn't tied to just one industry. For example, companies like Procter & Gamble represent consumer staples, while Johnson & Johnson is a healthcare giant. This sector diversity is a key reason why dividend aristocrats are considered a solid foundation for many investment portfolios. Consumer staples companies are often well represented among dividend aristocrats. These businesses provide essential products that people use every day, such as food, beverages, and household goods. Their steady demand helps them generate consistent cash flow, which supports regular dividend increases. Brands like Coca-Cola and Procter & Gamble have become household names not just for their products, but also for their impressive dividend history. Healthcare companies like Johnson & Johnson and Abbott Laboratories are also prominent dividend aristocrats. The healthcare sector benefits from ongoing demand for medical products and services, regardless of economic conditions. This stability allows these companies to maintain and grow their dividends over time. For investors, healthcare dividend aristocrats offer both income and the potential for long-term growth. Industrials like 3M and Emerson Electric have also earned their place among dividend aristocrats. These companies are known for their innovation, efficiency, and ability to adapt to changing markets. Their diversified product lines and global reach help them generate steady revenues, supporting their long-standing commitment to dividend growth. Industrial dividend aristocrats are often seen as bellwethers of economic health. Financial companies like Aflac and Franklin Resources are also part of the dividend aristocrats club. These firms have demonstrated strong risk management and the ability to generate profits even in challenging environments. Their disciplined approach to capital allocation allows them to reward shareholders with consistent dividend increases. For investors, financial dividend aristocrats offer a blend of income and resilience. One of the biggest advantages of investing in dividend aristocrats is the power of compounding. When you reinvest your dividends, you buy more shares, which in turn generate even more dividends. Over time, this snowball effect can significantly boost your total returns. Compounding is a key reason why long-term investors are drawn to dividend aristocrats, as it helps grow wealth steadily and reliably. It's important to note that dividend aristocrats don't always offer the highest yields. Instead, their strength lies in consistent dividend growth. While high-yield stocks may seem attractive, they can sometimes signal underlying risks. Dividend aristocrats, on the other hand, focus on sustainable increases, which can lead to higher income over time. This approach is often more reliable for long-term investors seeking both income and safety. Investing in dividend aristocrats can be done in several ways. You can purchase individual stocks of companies that meet the criteria, or you can invest in exchange-traded funds, ETFs, that track the S&P 500 Dividend Aristocrats Index. ETFs offer diversification and convenience, making them a popular choice for many investors. Whichever route you choose, focusing on dividend aristocrats can help build a resilient and income-generating portfolio. Several ETFs are designed specifically to track dividend aristocrats. Examples include the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, and the SPDR S&P Dividend ETF, SDY. These funds provide exposure to a basket of companies with long histories of dividend growth, allowing investors to benefit from diversification and professional management. ETFs are a convenient way to access the Dividend Aristocrats strategy without picking individual stocks. Any Dividend Aristocrats offer dividend reinvestment plans, or DRIPs. These programs allow shareholders to automatically reinvest their dividends into additional shares, often without paying commissions. Over time, this can accelerate the compounding effect and help investors build larger positions in high-quality companies. DRIPs are a powerful tool for those looking to maximize the benefits of dividend growth investing. One of the key advantages of Dividend Aristocrats is their ability to help investors keep pace with inflation. As these companies raise their dividends over time, the income you receive can grow, helping to offset the rising cost of living. This makes Dividend Aristocrats an attractive option for those seeking to preserve their purchasing power in the long run. Dividend Aristocrats are often less volatile than the broader market. Their stable business models and consistent dividend policies can help cushion the impact of market swings. For investors, this means a smoother ride during turbulent times and a greater sense of security. While no investment is risk-free, Dividend Aristocrats have a proven track record of weathering storms. Total return combines both capital appreciation and dividends. Dividend Aristocrats have historically delivered strong total returns, thanks to their steady dividend growth and solid business performance. By reinvesting dividends and holding these stocks for the long term, investors can benefit from both rising share prices and increasing income, making Dividend Aristocrats a compelling choice for building wealth. During market downturns, Dividend Aristocrats often outperform the broader market. Their strong balance sheets and reliable cash flows allow them to maintain dividend payments even when times are tough. This resilience provides investors with a sense of stability and helps reduce the impact of market declines on their portfolios. For retirees, Dividend Aristocrats can be an excellent source of income. Their consistent and growing dividends provide a reliable cash flow, which can help cover living expenses without the need to sell shares. This makes them a popular choice for those looking to build a sustainable retirement income strategy. While Dividend Aristocrats are generally considered lower risk, it's important to remember that no investment is completely safe. Companies can face challenges that may impact their ability to maintain dividend growth. However, the rigorous criteria for inclusion in the Dividend Aristocrats list helps filter out weaker companies, reducing overall risk for investors. Dividends are typically taxed as income, so it's important to consider the tax implications of investing in Dividend Aristocrats. In some cases, qualified dividends may be taxed at a lower rate, but this depends on your individual tax situation. Consulting with a tax advisor can help you optimize your investment strategy and minimize your tax burden. Including Dividend Aristocrats in your portfolio can enhance diversification. Because these companies come from various sectors and industries, they help spread risk and reduce the impact of any single company's performance. Diversification is a key principle of sound investing, and Dividend Aristocrats can play an important role in achieving it. Many Dividend Aristocrats are also considered blue-chip stocks. These are large, well-established companies with a history of reliable performance. Blue chips are often leaders in their industries and are known for their financial strength. By focusing on Dividend Aristocrats, investors can gain exposure to some of the most respected names in the market. Companies that consistently raise dividends demonstrate a strong commitment to creating shareholder value. By returning profits to investors, they build trust and foster long-term relationships with their shareholders. This focus on value creation is a hallmark of Dividend Aristocrats and a key reason for their enduring popularity. Strong corporate governance is another characteristic of Dividend Aristocrats. These companies are typically well managed with transparent policies and a focus on long-term success. Good governance helps ensure that management acts in the best interests of shareholders, supporting consistent dividend growth and financial stability. Many Dividend Aristocrats are household names with powerful brands. Their strong market positions and customer loyalty help drive consistent sales and profits. This brand power supports their ability to maintain and grow dividends, making them attractive investments for those seeking both stability and growth. Any Dividend Aristocrats operate on a global scale, with significant international revenues. This global reach helps diversify their income streams and reduces dependence on any single market. For investors, global Dividend Aristocrats offer exposure to growth opportunities around the world, while still providing the stability of consistent dividends. Innovation is a key driver for many Dividend Aristocrats. By investing in research and development, these companies stay ahead of the competition and adapt to changing markets. Their ability to innovate supports long-term growth and helps ensure they can continue raising dividends for years to come. Any Dividend Aristocrats benefit from economic moats, competitive advantages that protect their profits from rivals. These moats can include strong brands, patents, cost advantages, or network effects. Economic moats help ensure consistent profitability, which supports ongoing dividend growth and makes these companies attractive long-term investments. In addition to dividends, many Dividend Aristocrats also return value to shareholders through share buybacks. By repurchasing their own shares, companies can increase earnings per share and support share prices. This dual approach, dividends and buybacks, demonstrates a strong commitment to rewarding investors. Prudent debt management is a hallmark of Dividend Aristocrats. These companies typically maintain conservative balance sheets, avoiding excessive leverage. This financial discipline helps ensure they can continue paying and raising dividends, even during challenging times. For investors, strong debt management adds another layer of safety. Strong and predictable cash flow is essential for sustaining dividend growth. Dividend aristocrats are known for generating ample free cash flow, which allows them to invest in their businesses, pay down debt, and return capital to shareholders. This focus on cash flow management is a key reason for their long-term success. Quality management teams are a common trait among dividend aristocrats. These leaders focus on long-term value creation, prudent capital allocation, and maintaining a strong financial position. Their disciplined approach helps ensure the company can continue raising dividends, even in challenging environments. Consistent performance of dividend aristocrats inspires confidence among investors. Their long histories of dividend growth signal reliability and trustworthiness. This reputation helps attract long-term investors who value stability and steady returns, further reinforcing the company's market position. Many dividend aristocrats are leaders in their respective markets. Their dominant positions allow them to set industry standards, influence trends, and capture significant market share. Market leadership supports profitability and provides the resources needed to sustain dividend growth over time. Economic resilience is a defining feature of dividend aristocrats. Their ability to adapt to changing conditions, manage costs, and maintain profitability helps them continue raising dividends, even during recessions. This resilience makes them attractive to investors seeking stability in uncertain times. A long-term perspective is essential for dividend aristocrats. These companies prioritize sustainable growth and shareholder returns over short-term gains. Their focus on the future helps ensure they can continue raising dividends and delivering value to investors for decades to come. Consistent performance and reliability of dividend aristocrats foster strong shareholder loyalty. Investors who value steady income and long-term growth often stick with these companies through market ups and downs. This loyalty helps support share prices and reinforces the company's commitment to its investors. Many dividend aristocrats are also leaders in corporate social responsibility. They invest in their communities, prioritize sustainability, and uphold ethical business practices. This commitment to social responsibility can enhance their reputations and attract investors who value more than just financial returns. Dividend aristocrats often receive extensive coverage from financial analysts. This attention provides investors with valuable research, insights, and updates on company performance. Analyst coverage can help investors make informed decisions and stay up to date with the latest developments. Transparency is a core value for dividend aristocrats. These companies provide clear and regular communication with shareholders, including detailed financial reports and updates on business performance. Transparency builds trust and helps investors feel confident in their investments. Looking ahead, dividend aristocrats are well positioned for future growth. Their strong balance sheets, commitment to innovation, and focus on shareholder returns provide a solid foundation for continued success. As new companies join the ranks and existing members maintain their streaks, the Dividend Aristocrats list will remain a valuable resource for investors seeking quality and reliability. Sum up, Dividend Aristocrats are companies that have increased their dividends for at least 25 consecutive years. They offer stability, reliable income, and the potential for long-term growth. By focusing on quality, consistency, and shareholder value, these companies have earned their place as favorites among income-focused investors. Whether you're building a retirement portfolio or seeking steady returns, Dividend Aristocrats are worth considering. Now that you understand what Dividend Aristocrats are and why they matter, you're ready to start your own dividend investing journey. Remember, patience and discipline are key. By focusing on companies with a proven track record of dividend growth, you can build a portfolio that stands the test of time and provides reliable income for years to come.